we're gonna break down my 6 picks for 2026, man. 6 stocks that I love, that I see high potential and growth in. Before we go ahead and get started, make sure you guys press that like and that subscribe button and comment in the comment section some of the stocks that y'all are watching in 2026. Let's spread the knowledge and spread the wealth. All right, so let's start off with the first one, UNH, United Health Group. All right, so a little bit about UNH. They are a healthcare company that operates in the United States and internationally. The company operates through 4 different segments: United Healthcare, which is the insurance; Optimum Health; Optimum Insight, which is the technology and the software side of things; and Optimum RX. All right, some things to love about UNH. It is trading at 60.3 below its estimate value. Earnings are forecasted to grow around 10% per year. Earnings grew last year by 22.9%. and it pays a great dividend. The last dividend payment that I received was $2.21 per share that I had, which is phenomenal. Another thing to note, is also trading at a good value compared to its peers in the industry. As you can see, revenue over the past 10 years has grown while earnings and free cash flow has stayed pretty consistent. Some concerns for me personally with UNH would be their debt. They do have a decently high debt to equity ratio with about 47%. And they're not reducing it. Over the past 5 years, it's went from 62.6% to 75.7%. They have decent free cash flow that they can use to pay some of the debt down. United Health CEO Stephen Helmsley also meeting with the Chief of Staff for the Health Department, Susie Wiles, to discuss Medicare and other policy changes that are to come. So basically them aligning themselves with the current regime could benefit how they make money. The 2 earnings that we missed on this chart caused us to fall drastically, and when we rebounded around this 240, 250 level is when they announced that Warren Buffett had taken a pretty big position in UNH around $300 a share. On 8/14, I actually did buy a couple shares of UNH around $300. October, November-ish, we retested 300 again, which I did take another buy at, and I'm currently holding, just enjoying the dividends on this and just seeing how high we can go. I will continue to buy all the way down into that 250, 240 area. If we do touch that, that'll be a blessing, but if not, I'll just continue to hold this stock, potentially take some day trades on it. I do like it for the long term and could see us going as high as 440. Now my second pick for 2026 is Nike. I do like Nike a lot, and Elliott Hill, their CEO, and Tim Cook have been buying a lot of insider shares. I think they bought $1 million or $1.2 million a piece, around $60, and it dipped into 57 and came right back up. But I really like this stock. I think it's at a decent discount. If we can get a little bit lower, maybe into 50, 52 range, I could buy some leaps. I could buy some shares and start a long-term position in this stock. I really like it because it's a legacy brand. I really want to see Nike just get back to the basics and start investing back into the consumer and also back into the superstars. You know, you see athletes like Steph Curry try to go with Under Armour and the deal didn't work out. I feel like Steph Curry is one of the greatest basketball players of all time, but it's just something that Nike logo and that Nike essence brings that boosts you up even more. So I really think Nike is one of those legacy brands. Now that they have changed leadership, they need to get back to doing what they do best. As long as the earnings and positive news keeps flowing in, shares keep getting bought back, I think we will see this return back into the 80s where it's supposed to be in the 70s, not all the way down in the 50s and 60s. You can trade Nike multiple ways this year. Swing trades. I'm personally buying shares and leaps. Another thing to consider is the tariffs that have been going on too. Nike is obviously a clothing and a shoe company, and them having a lot of overseas manufactured stuff is going to affect how much it costs to ship and get over here, and the labor prices, all that, you know, are affected by tariffs. So whether the Supreme Court rules to keep the tariffs, whether they get taken away, is going to also have an effect on Nike's price. A great stock to watch this year regardless. Let's go on to the next, number 3, which is Meta. Now, a couple of reasons I like Meta for 2026 is because of their recent purchase of the agentic AI, Manus, whatever they call it. They are stepping into a space of AI that is no longer just type of response, it's agentic. So the AI can help the business owner create a business on Instagram. I love their PE ratio, 24, I think it's actually 22, and they're in the Mag 7, so that's a lot more reasonable than other tech companies within the Mag 7. Them, along with Google and Amazon, are projected to share 56% of all ad spend globally by the end of 2026. So Those three reasons alone, and just the fact that, you know, we all use Meta, we all are on Instagram, we all are on Facebook. So I think this is the year that we see a lot more free cash flow with Meta, after 2024 and 2025 being the investment years where they were spending on AI companies, the Meta glasses, and now we see what the result of that is. So now next up on this list I'm going to cover is TTD, the Trade Desk. Now, the Trade Desk operates as a technology company based in the US and internationally. The company offers a self-service, cloud-based ad buying platform that allows you to plan, manage, optimize, and measure different ad campaigns across different places. You can see they have really good revenue and earnings history, consistent growth there with rising free cash flow as well. Their debt to equity ratio is also extremely good. They have a lot of money that they're making and they're not spending. A common argument against TTD is like, okay, well, what if people like Netflix or another big company go through like Amazon or Meta or Google to get their ads sourced out? And in my opinion, I feel like these big companies that smaller companies go through for advertisement isn't going to completely wipe out TTD's market cap or their space for getting the ad, because they use the open internet and they use television. So I think with so many people needing ads, there's more than enough space for big companies and smaller companies to thrive, just because this market is trillions and trillions of dollars. So now we look at this chart on TTD and see we have a stock split a couple years ago, 1, and 2, this stock has sold off quite a bit, all the way into this 38.40 area. So my plan on this is to dollar cost average all the way down into 33 and 30, potentially some leaps, and hold this all the way back into 72 and 80. This is the weekly chart on TTD. We ran up very high, all the way to about 140. So in my opinion, if we can hold strong at the bottom here in 38, we will be back okay into 70. For my number 5 pick, I'm gonna go with SoFi. All right, so a little bit about SoFi Technologies. It provides various financial services in the United States, Latin America, Canada, and Hong Kong. It operates through 3 segments: lending, technology platforms, and financial services. Obviously at IPO, there was quite a bit of volatility for those first 2 years, but from that time, from about 2023 to 2020, end of 2024, we didn't really start moving like that. But one thing about SoFi is it does get liquid at these price levels. So I am looking for a pullback in either 23 or 20 for my big buy into this company. Certain analysts had price targets around 27.50, which we have been hovering at for quite some time, have lowered their targets to around 20. And I think 20 is a good price that I want to start scaling into this company heavily at. But for now, I'll just dollar cost average until we get around there. Or maybe we could do an option swing trade about 30 if we can get some momentum. But this is one of those stocks, when it's moving, it's going to move, but it can have some pretty long consolidation phases. So it's just best to be patient with this. But I do like this company as a whole. And for the 6th pick of the 2026 draft to my stock portfolio, that's already in my stock portfolio that I want to buy some more of, is NVIDIA. Now, analysts expect NVIDIA's growth to exceed 48% and accumulate $316 billion. They have in the past traded at a 60 PE, but are currently trading at a 24, which is a discount. One of their chips, called Blackwell, is currently backlogged 3.6 million units and is sold out for the next 12 months. Demand for these chips and for their product from all these data centers, foreign or domestic, is higher than ever, and supply is catching up. So they are making chips at a higher rate than their competition, meaning that they control the price. Last but certainly not least, when we look at this NVIDIA chart, this is one of those companies and one of those charts that you just want to dollar cost average in. I want to get in around 150. Hopefully we can get to 120. I can get some more averaged in, but my average price on this is around 100. So we'll see what happens. But you can take day trades on this. You can swing this. You can trade this however you want. This is just a great stock that moves well. And that's my 6 picks for 2026. I appreciate you guys for watching this whole video. And if you guys want my exact plays, please join my Discord in the link in the bio. Make sure you guys join the SDF family, subscribe, like, comment some more stocks that you guys are watching in 2026, and I will see you guys in the next video.